what's your take? Twitter won round one. That means they've potentially got the upper hand in round two. Is that good for the company?
Well, I think it's good for Twitter shareholders, especially seeing the sell-off in technology stocks over the past couple of months. I think the deal is very richly valued in today's terms. And, I actually expect Twitter to prevail in court. I think that the agreement is pretty ironclad as I read it. And Twitter's lawsuit is very clear. I think, if you read it, you find it pretty compelling that Musk had agreed to buy the company even in the case of a market downturn. So I think this is going to go in Twitter's direction, which I think is good for Twitter shareholders. But, my own personal view, as I said last time I was on your program, is I'm not sure it's good for Twitter, the service, because I don't think that, Twitter being owned by a single person, particularly one whose public statements have kind of indicated a lack of a deep understanding of the way the platform works, particularly in areas of trust and abuse. I'm not sure that's good for Twitter, the service. So that's my personal view, and it's been pretty consistent over time.
So let's game this out and talk a little bit more about why. Let's say Musk is forced to do the deal. He owns Twitter. He could turn right around and sell it. That is also a possibility. If he is forced to do this deal, then what do you think happens?
It's very awkward to force someone to buy something that they are saying they don't want. And I don't know how he reacts. I think one thing that Elon has proven is that he's quite unpredictable and quite, extreme sometimes in what he wants to do. So your guess is as good as mine. If he's forced to buy Twitter, probably what happens, if I were to just speculate, is that it will lead to some kind of renegotiation where he has some kind of face-saving outcome where he can claim he was happy and he becomes a happy buyer again. Because I don't think he's going to be able to get out of this. I'm not a lawyer, but my read of the documents, that's what I believe. I don't think he's going to get out of this. Maybe there's a compromise where he pays a little bit less for it, or the terms are altered in some way or another, where he ends up magically being a happy buyer again. And we'll see what he does. I would be surprised, and I think it would be a terrible outcome for probably everyone involved if he buys it and then turns around and looks for a new buyer. I think probably he would take a bath on a transaction like that. But in any case, look, my view of Twitter is it's too important a company to be like a little hot potato that's jumping from one person's hands to another, or going private and going public, et cetera. If he buys it, I hope he has serious enough about really making the platform better and helping it to reach its true potential. I think that's everyone's hope. And I still, have my fingers crossed that somehow happens.
So part of the reason this is a, quote unquote, good deal for Twitter shareholders is because the market has plummeted. Obviously, putting on your Y Combinator hat, and, obviously, you've been the CFO of big public companies. How bad is this for Silicon Valley? How lasting is this downturn? And what does it look like as an inflection point when we look back a decade from now?
Yeah, great question. I think it's important to put it into the right historical context. We went through a really remarkable period in 2020 and 2021 in terms of technology stocks, where the COVID, sort of the changes in the COVID economy really benefited a lot of tech stocks. And there was a feeling that everything was moving into the internet immediately. And we saw a really historic run up in technology stocks with stocks trading at multiples that had kind of never been seen before. And so everyone was expecting a correction, perhaps not one that was as rapid and severe as what we've seen, but everyone was expecting a correction. And that's what we've seen. So, I think there are a number of companies, great technology companies, recent IPOs like DoorDash or Datadog. They're just wonderful companies, and I think they've been oversold. That's my personal view. But I think if you zoom out, my expectation is that this will be like other things, like other recessions and times of market, turbulence, will be seen as just another one. Perhaps one where the slope downward is a little sharper, but nothing that fundamentally alters the view that technology is changing our society, and that technology companies that are driving that change will be valuable, and that there are more of them to come. In our portfolio, companies like Stripe and Brex, Those are some of the public stocks that are Y Combinator companies. But the Stripes, the Brexes, the Fairs, Gusto, et cetera, there are a lot more amazing companies that have great businesses that will continue to be disruptive and will continue to be really amazing assets for investors to own.
Well, it's interesting you mentioned Stripe because obviously they've been in the news for sort of an internal revaluation. Paul Graham, the co-founder of Y Combinator, has this essay called Default Dead, Default Alive. Who do you think survives? Who do you think dies in this downturn? And how is that informing your investment decisions now?
So this may surprise you, but almost every company, private company that has a reputation, that people on your program will have probably heard of, I think they all survive. And the reason is the markets have been so frothy over the past few years that almost every promising technology company in the mid to late stages is extremely well capitalized. I mean, these are companies that have raised hundreds of millions of dollars. And yeah, there have been some downsizing and some adjustments. But in most cases, those were done not because the companies were under duress, but because they said, hey, this is an opportunity for us to right-size the business a little bit, given the economic climate, everyone will understand and lengthen our runway. So I don't expect for mid to late stage private companies for there to be a bloodbath at all. I expect modest belt tightening, but almost all these companies are going to just continue to invest in growth.